Good morning, ladies and gentlemen. We begin our top stocks section today discussing one very important facet of investing, which is mid-cap funds. Yes, mid-cap funds at a time when there is enough volatility in the market that is at levels which are distressing. I'll request the PCR to please fire the long-term chart of the Nifty mid-cap index. As we know, the index has fallen somewhere like 23% over the last 6 months to 46,700, and from 46,700 in the lows of March, it is now back up to 53,321. Yes, this is a volatile index, and many of the mid caps funds that we track have also given a similar performance, fallen between 18, 19, 17%, lower than of course the index, and have now risen sharply. The reason why I suggest that you need to invest in mid cap funds to the extent of about 20 to 25% of your overall mutual fund corpus is because mid caps are the ones that create immense wealth over the long term, and these are the ones that have to be held through the volatile period, and more importantly, they have to ensure that you have your SIP in place, which is the systematic investment plan during this volatile period. And nothing better can be illustrated by this example in HDFC Mid-Cap Opportunities Fund. We are going to analyze this fund as a measure to gauge how market returns and rewards long-term shareholders, and what should be done in volatile times like this. Does history give you an example? Let's look at the HDFC Mid-Cap Opportunities Fund closely. The net asset value of this fund is 191 rupees 30 paisa for the direct option. HDFC Mid-Cap Opportunities Fund is amongst the largest mid-cap funds in existence. It has an asset under management of 67,580 crores, one of the major behemoths of the mid-cap scheme. The fund was launched in June 2007, and this is of something very critical importance. What you saw in September 2024 was repeated in June 2007. The rally in the markets during June 2007 was 3-4 years old. It had started at the base of 2003, and the market was peaking rapidly in June 2007. And just as we have seen a flurry of mutual fund launches in the last 6 to 8 months, in the last 1 year or so, similarly many mutual funds and schemes in large cap, mid cap and small cap segment were launched. So history repeated itself. And then what happened? From March 2008 till about March 2009, the net asset value of HDFC Mid-Cap Opportunities Fund actually fell from 13 rupees to 5 rupees 30 paisa. This was a massive correction of about 40-45%, because the global financial crisis destroyed a lot of valuations and a lot of pain was injected into the system. From the low of March 2009, we have a net asset value today of 191. If you look at the all-time high of this fund, it is somewhere to the tune of 210. So you must see how volatility destroys net asset values, but for those who hold on to the investment in a quality mutual fund and continue their SIPs, they make supernormal money. Now, since the launch of 2007, the return has been 17.5% CAGR for HDFC Mid-Cap Opportunities Fund. What does that mean in terms of actual money? If in the last 10 years you had put in a monthly systematic investment plan of just 10,000 rupees, you would have invested 12 lakh rupees spread over a decade, but that 12 lakh rupees, even in this painful time, would have been 35.35 lakh rupees. If from the month of inception of HDFC Mid-Cap Opportunities Fund, you had put in a 5,000 rupee SIP over a period of 16 years on a monthly basis, you would have invested 9.6 lakh rupees, and that amount would have been 57 lakh rupees, which gives you a compounding of 20% each year. Remember, in this 16-year period, we have seen massive destruction and massive explosion in equities. In the past 16 years, what all has gone wrong? We've had COVID, we've had problems with China, we've had changes in government, we've had economic policies which may not have given up as much return as was expected. But for all those investors who held their faith in quality mutual funds such as HDFC Mid-Cap Opportunities Fund, they have been rewarded handsomely. Let's dig a little deeper. HDFC Mid-Cap Opportunities Fund has 78 stocks. Out of those 78 stocks, the top 10 holdings account for 31% of the asset under management, which, as I have told you, is 67,000. So about 18,000 crore rupees is invested in top 10 stocks, and out of those top 10, the top 5 stocks account for 18%. And what are those top 5 stocks? Max Financials, Indian Hotels, the largest hotel chain in India; Balakrishna Industries, the maker of specialty tires; Federal Bank, a mid-cap lender which has great prospects; mid-cap IT company Coforge. Also, in the next 5, you have anti-malarial drug maker Ipca, again a mid-cap company Persistent Systems from the IT space, Indian Bank, and of course HPCL. So these are the top 10 holdings of HDFC Mid-Cap Opportunities Fund. Now look at the portfolio price to book ratio. It is below 3. Despite the fact that you have huge companies that are immensely profitable and have high PEs, the fund manager has done a fantastic job in keeping the overall portfolio price to book below 3. And equally, the portfolio price to earnings is below 22. That means even though mid caps offer phenomenal growth prospects over the longer term, but a PE of below 20, 21, 22 essentially means that it is not an overvalued portfolio when you compare it with the PE of the index. So these, ladies and gentlemen, are 2 or 3 things that you need to keep in mind when you get into mid-cap funds, even at the peak of the bull mania. If you have made that mistake, all that you have to do is to please hold on to that fund over an extended period. Please keep your monthly SIPs in place, and over a period of time you will see that this pain that you have undergone has resulted in financial wealth creation. Again, I repeat, this is not an invitation to invest in HDFC Mid-Cap Opportunities Fund. For that, you will have to speak to an independent mutual fund advisor. But this is a study of the fund which will help you at least come to a decision on where to invest, and of course the background. So remember, hold on to your mid-cap funds. Please continue with your SIP and wait for this volatility to get over, and of course the momentum and the compounding to take you higher and higher. This was what about HDFC Mid-Cap Opportunities Fund today. Let us now pay attention to what the markets are telling us. Well, ladies and gentlemen, I'll request the PCR to fire the longer term chart of the Nifty. What you see is a mild downdraft, down about 24 points at 23,646. Remember, the Nifty has rallied very sharply over the last 10 odd sessions, adding somewhere like 1650 points. In fact, if you see yesterday's high, which was 23,800, the index had added somewhere like 1900 points in the last 7 trading sessions. A bit of a profit booking that is coming in, and this is a very welcome measure because it allows newer and far stronger players to come back into the market, and of course a bit of profit booking also helps to keep everyone happy. What is buzzing in the market? Well, it is the industrial space. Companies such as Siemens up 6.4% at 5,450. on news that its energy division will now be listed independently in the secondary markets. Look at L&T. The company has won its largest order ever of 15,000 crore rupees from Qatar Energy, and L&T is also in top shape. Look at HEG. This is the third day of very decent gains, 5.4% higher at 509. HEG makes electrodes for the steel industry, which help to melt the metal quickly. What else is there in terms of gainers? In the metal space, Hindustan Copper is doing very well, 2% higher, 233.65. Essentially, it is catching up with the global rally that is happening in the underlying metal. Let's also pay attention to the broader market. Let me just look at the advanced decline ratio. Today, it is in favor of bears. Only 944 shares are in the green versus 1500 that are in the red. There is a bit of profit booking across the board. We track 19 indices for you. Out of 19, 10 are in the red. The biggest loser is the Nifty Media Index and the Nifty Pharma Index, but you see smattering of gains in the metals index. The Nifty Mid-Cap Select Index is up 0.33%, and of course the Mid-Cap 100 Index is in the green, as also the Nifty PSU Banking Index. So all is well in the market, ladies and gentlemen. We are headed not only towards the end of the FNO expiry for the month of March, which has been fantastic. We are also headed towards the end of the financial year on 31st March. So these are good times to start quality SIPs, which I have been telling you over the last 15-20 days. Should you wish to get into the long-term super wealth creation space, mutual funds are relatively the safest assets to bet on, and that too in a systematic fashion over the next many months. Thank you for watching. I'll be back at 2 p.m. with another quality fund to discuss, and then we'll take the discussion forward as far as markets are concerned. Have a nice afternoon.
Days after the Karnataka Assembly passed a bill